Ozempic and taxes, what is deductible and what is not. If you have noticed Santa and his elves look slimmer recently, you are not imagining it. Weight loss drugs such as Ozempic, Wegovy, and Zepbound are now widely popular. Economists are even tracking what they call the Ozempic economy across markets. A diabetes medication became a lifestyle trend strong enough to move airline stocks. Clothing companies and grocery chains feel the effects as spending patterns shift. As always, tax angles are hiding inside this trend for careful planners. The most obvious question is whether these medications are deductible at all. The short answer is yes, with a few important caveats for taxpayers. If a licensed doctor prescribes the drug for a legitimate medical reason, it qualifies. You may pay it from a health savings account or HSA directly. A flexible spending account or FSA also works for eligible expenses here. It can also count toward the medical itemized deduction after clearing the usual hurdles. What is not deductible is the celebrity version of Ozempic use, though. If your justification is fitting a reunion outfit or winning a golf bet, expect trouble ahead. The Internal Revenue Service, or IRS, will call shenanigans and likely disallow it. Doctors remain cautious for the same reason and to protect their licenses. The next ripple involves employer health plans and their cost structures today. Demand for these drugs is rising across industries and insurance markets rapidly. Insurers are deciding which versions to cover, how long, and under what conditions. Some large employers warn that coverage could spike overall premiums for everyone. Others switch to wellness programs that promote non-pharmaceutical solutions first instead. If you sponsor a group health plan, this quiet storm is worth watching. If these drugs become standard benefits, premiums could launch like a SpaceX rocket. There is also a business deduction lesson inside the Ozempic story today. Some companies report unexpected customer behavior changes linked to these medications recently. Some airlines see a small improvement in fuel efficiency for each passenger. Pizza sales revenue is down in several markets and consumer segments now. Couture fashion houses celebrate because they do not make plus sizes today. This reminds us that markets often shift faster than tax law can. If your business follows consumer trends, those shifts can affect you significantly. Another twist is the surge in wellness-related spending across many households. Many people who lose weight start investing in gyms, fitness technology, or coaching. Most of that spending is personal and not deductible, however healthy it feels. There are exceptions for specific employer-sponsored wellness programs under current law. Business owners can structure benefits to support health while remaining deductible overall. Avoid anything that looks like giving employees treadmills or similar personal property. The Internal Revenue Service will not love that approach in most cases. This is general information, not tax advice. Talk to a qualified professional about your situation. The biggest long-term takeaway is that this is not about one drug. It reflects a shift in how many Americans approach their long-term health. As more people pursue medically supervised weight loss, dollars flow into healthcare services. Coaching, fitness, and food services also see new spending and tax footprints. Health savings accounts grow more valuable, and employer plans become more complex. Consumers grow more interested in identifying deductible expenses accurately and responsibly too. Wellness and nutrition businesses gain opportunities alongside new compliance burdens as well. If you are considering these medications, speak with us before assuming deductibility. If you run a business, consider how changing habits could touch your bottom line. Talk with us about the tax impact and the planning implications involved. Trends like this may leave headlines quickly, yet create lasting tax consequences. Welcome to the Ozempic Economy, wherever your opinion falls on this topic. It is already reshaping how people spend money across many daily choices. Whenever money shifts, taxes usually shift right alongside the new patterns too. If you would like help buying more stuff you love and stop overpaying your taxes, David Tuck, former IRS auditor and founder of Anvil Tax, is here to help. Visit us at anviltax.com.